And therefore, and that is, even in this period, we have gone through a lot of global challenges, global crisis, etc. So a 7% real GDP growth is compatible with the 8+% dollar GDP growth, which is what the means that it is doing better than the previous generation, and whether they are very confident that their future generation will do better than them. That is a sign of development. 20.
सर मैं लक्ष्मण सिंह की सेवा से इकोनॉमिक सर्वे में कहा गया है कि ongoing trade negotiations with United States are expected to conclude during the year, which could help reduce uncertainty on external front. मेरा दो क्वेश्चन है कि during the year means what, कैलेंडर ईयर या फाइनेंशियल ईयर. दूसरा क्वेश्चन, अगर यूएस के साथ ट्रेड डील हो जाती है तो जो जीडीपी ग्रोथ का हम लोग फोरकास्ट किए हैं, क्या उससे और बेहतर होने की उम्मीद की जाएगी, और ट्रेड टैरिफ से कितना असर पड़ा है जीडीपी पे, कुछ कैलकुलेशन हुआ?
So I don't have anything more to add to your first question. It is something that is better directed at the Ministry of Commerce. As far as the second question is concerned, we have taken that into consideration. When we projected 6.5% 3 years ago, we did so under the assumption that even at that point in time, we were realistic about the growth, export growth prospects, given the evolution of trade disputes. But now, we have been in the last few years signing a lot of free trade agreements, the most recent one being with the European Union. Of course, it will take a year or so to get ratified and then being effective. So therefore, the 7% growth rate doesn't necessarily depend to a large extent on the tariff situation resolution, because we don't know at this stage the timelines attached to it. But if it happens, it will definitely further bolster the chances of achieving 7% or even better. Do you have anything more to add, Rosemary? Okay. Any other number?
So, Tulsi Japuria this side from CNBC TV 18. So, you've mentioned about the risk on job losses due to AI and AI adoption, and you've also spoken about reskilling. But you did not mention certain areas where these job losses have a future potential, in terms of which would be these areas where people can now reskill and look forward to as future areas where there can be employment.
I have to leave some work for you to do as well, in terms of reading the chapter. 76. Left.
Just a couple of questions. This is Vikas Dhoot from the Business Standard newspaper. Thank you for acknowledging that line from our paper. But I also want to say that it was a refreshing read, whatever I've been able to read so far of the survey. You, of course, invoked Joseph Feller, which I really like. But you talked about the indiscriminate quality control orders that we're now pushing back on, and some of the other reforms that the government has recently done, and which is what you said is added a sense of dynamism in the functioning of the government, which you expect will take us to the next level. I want to get a sense from you on this issue that you flagged of the cost of capital. You said the rupee is punching below its weight for some reasons, but the concern comes for you from the investors, seeing the rupee's decline as a cause of concern. And you said that investor reluctance warrants attention. So I want to get a sense of whether you can elaborate a bit more on what kind of attention would we need to address this investor reluctance. And is it only about the rupee, or there's a broader concern that is driving investor reluctance? And secondly, I have a question on PPP, but I will ask after this.
So I did not use the word indiscriminate. By the way, it's your word, not mine. I simply said quality controls orders have been revoked and suspended, and that's a good thing, because the government revisits some of its own stance when the empirical experience shows that the net costs are higher than the net benefits, etc. So that is exactly the point I made, nothing more, nothing less. And when it comes to investors, I have nothing more to add. I said valuation concerns, maybe the fact that India doesn't have an AI story, and uncertainties related to tariff might be holding investors back. But if you look at the flows of FIIs over the years, there have been times when they have come in and when they have been out for slightly longish period and we would like them to be, etc. So I also said usually when sentiment is weak, that is actually also a good contrarian indicator for the market to revive and for investors to come back. So there are both geopolitical factors. I alluded to the opportunity cost of sending money overseas, etc. So multiple factors. It's neither correct nor will it do justice to the issue to try and reduce it to just couple of variables.
So second, just a quick
I think we
question.
should probably let others and then come back later.
Yes,
Is that
one
fine?
question is, I think we have to be considerate to others. So, 54. Is front.
Sir, this is Rishabh Bhatnagar with NDTV Profit. Firstly, sir, what is the sort of impact that you're seeing of the rebasing of the CPI when it comes to inflation assessment? And secondly, you point that private investment intentions are improving. What does it mean given the fact that there are certain penal tariffs still in place?
The new CPI would be released on 12th of February, so we would be knowing the numbers, but we are not expecting inflation to be a major concern at this point. Even the drivers are, really benign at this point in time.
237.
The next question on private investment intentions, Dr. Shansar Sarkar will respond to you.
Hello, sir.
Yeah.
My name is Suchandrima. I'm from INS. I have two questions. The first is, rupee has reached 92 level against US dollar today. So how do you look this situation and how can this be tackled? And my second question is on foreign investors are selling fast in India stock market since last year. So in this case, cause of serious concern, how can they be brought back into India?
So I think the answer to the rupee valuation is exactly what we discussed. So the long-term answer is manufacturing competitiveness, exports, and in the short run, some developments may not be in our control, but more importantly, the fact that the rupee is not reflecting the macro fundamentals and the sustained growth rate will definitely catch the attention of some investors, and that is when the tide will turn. And if you look at the rupee's performance, as I showed you, it isn't out of line with what other emerging market currencies have gone through and are going through at this point in time. It is a geopolitical risk, and that is what is reflected, not just in the Indian rupee, but elsewhere. That's why I wanted to put the Indian rupee performance in the context of what's happening elsewhere. So, the answer to your question lies in the fact that as the currency remains weak and fundamentals continue to display strength and solidity, investors will reappraise their stance towards the currency. And if we continue on the path of structural reforms, as we have been doing in the last 12 to 18 months, both in the union and state governments, then as Indian exports show resilience and even grow, that will also further consolidate the revised perceptions on the Indian rupee going forward.
I think you know.
Yeah, sorry. Thank you so much. So good afternoon, Sapna Das here from CNBC TV. So two quick ones. You explained a lot on the rupee and the commentary is also quite significant what you mentioned in the survey. But given the fact that all these are reforms underway or need to be done, are being done, are in the process.